Moving the curtain along. All right. Good afternoon, everyone. It is Tuesday, September 17th, 2024. Interesting day in the markets. New all-time highs yet again for the S&P. Everyone's 401k and portfolios, if you're long, highest valuation of all time. Let's see how we got here. Interesting day. That high came in the morning, and then we hit a low at 130. We'll pull it up. And what actually were the drivers today? Airlines was a big push. Bitcoin got over 60K, a big day today, 3%. In China, jumped higher. Healthcare in Japan slid 1%. New all-time highs for the SPY. Utilities, industrials, the equal weight ETF, communications led by Meta and Google. A lot of strength here under the hood. So let's take a look first at the doc here, and I'll show you what I'm talking about. If you have any tickers, anything you want to look at in this rising environment, let's see if it's Fed Eve. Tomorrow is the big Fed day. And again, these are the headlines from today. Airlines up 2%. You can see here, again, these are the multiple sigma movers, which is why I register and I look at the charts because they're mattering in a big way. Bitcoin up 3%. China up 1.5% today, just about up 1.4. Big move for China. We'll take a look at the chart if there's a setup there. We'll see how we're doing on our other setups here. And then XOP, the oil and gas exploration and production ETF, had a nice jump today, up 2%. Healthcare down 1, led mostly by medical devices. They had a tough day, down about 90 bips, and Japan down 1.2. We're the only losers pretty much today in a multiple sigma level. And then we'll go over the top 3 absolute trades of the past week. Gold miners on a tear, specifically the juniors, and then the solar fund. This was, given a fair amount of time. We'll see if it's rebounded above its 200-day moving average. I doubt it. And then Mexico. So these have been the 3 big piling in trades going into the Fed announcement tomorrow. Let's take a look at the intraday chart first for the SPY. So you can see here, boopity boppity. Let me share my screen. No Rocco today. He is getting a shower. Thank the Lord, because he's been not as cleanly. All right. So we had him bored when we went on vacation and everything. So now he smells like other dogs, and I'm allergic. It's a whole thing. All right. So here's the all-time high right here at 10:30 a.m. We hit 566 and change. Just a little bit of background. I didn't expect the new all-time highs to be struck here, although that's the way. If you just trade the market in front of you, I said 570, 575 target through an accumulation phase that ends on or around September 25th. We got another week to go. We got to, I'm just going to round the handles, 567 here at 10:30. And then we had a hard time holding VWAP all the way through till about 11:30 a.m. You can see it through the orange line there. And then we really couldn't close. We couldn't recover. We actually hitting lows at 130, trading down to about 561 in the SPY, and then trying to make a move, but not quite doing it. 563.56 was VWAP. We couldn't get there by the end of the day. So, it's going to take a little bit more time for the buyers to accept that level. Longer term here, so zooming out, of course, we have a huge catalyst tomorrow with the Fed. Pretty much, I think it's a foregone conclusion. They might cut 25, but it seems like they're going to cut 50. We'll see what happens. But again, trading the market in front of us, which is what we're here to do, still an upward bias, as I said, through September 25th. Okay, there's a new all-time high. And again, look at the resistance here, just in terms of when we had this example last week. When you try and knock a door down, you put your foot right by the handle, but not exactly on the handle. You do it right beside, and then a couple kicks, it's going to knock it down, right? So you had this in July, and that was the new highs, right? And then you had this whole period in August, and now voila, here we are in September, trying to march through. You do have the seasonality that you're contending with right now through the next 2 weeks. Props to Ryan Dietrich putting this out. I believe it was him from Carson Block. I think is where he's at now. The next 2 weeks are the worst periods of seasonality for the market, literally. So I'm just not saying to the moon here, especially when you have an election, other, assassination attempts or whatever's going on here. So I don't think we're going to the moon here, but it is interesting in terms of the levels. If you get some expansion, I just see a lid on it here right around 573. I'm going to stick with that projection. So again, to sum that up, September 25th, I see us being around that 573 level, and then likely a consolidation and get back towards 555. So more to come on that. Let's take a look at, I'm not going to try and predict tomorrow's move. That's a fool's errand trying to predict a one-day move. Let's see what moved big today on Fed Eve. The airline's a big mover today, up 1.8%. That's big for them. So this thing, again, it's had a nice recovery here from the lows, the Japan crash. But let's see. So I always love doing, like I said, just so simple, the 200-day moving average test. So right here, it closed under August 1st. I immediately say, boom, September 1st to about September 8th. I want to see this recover. Well, guess what, y'all? It did a little bit over time. It's not an exact science, but you do have moving averages turning up, including the 200-day and the 50-day moving average. This looks okay. All I'm going to say, though, is this is a major – they're going to have a lot of work to contend to at this 1940 level. It's the upper Bollinger Band with a different time frame, a longer time frame, as well as its 200-day moving average. It is starting to climb. I think it potentially can be support later on, but right now I think it's going to toggle between this 1865 and 1940 level. Congrats if you're in this trade. I hate the airlines. It's just tough to trade. But again, trade the market in front of you. Interesting group, though, holding a 50 RSI since August 23rd. Not a bad group to be in for the last 3.5 weeks at 18 to 19.5. Again, I think it looks a little bit tired around the 19.5 level. And also in terms of not just calculated resistance, which is what I did. Now visually, so 19.5 is what I was saying. I mean, you can get to this 1995 level. It almost reminds me of the semiconductors in that it hasn't been convincingly above its July highs, basically that $20 level since June. And even that was a seesaw. I would say these are levels haven't really seen the next resistance level for airlines since May. And that was a different, environment entirely. So we'll see. But I do like to swing in the 200-day moving average. I think it's going to get tired here. But airlines, nice 2% move today. All right, IBIT. Wow, Bitcoin today finally getting a little bit of a jolt up, 3.5%, 4%, basically, depending on the ETF and how it rolls and borrows its futures. So here, I think Bitcoin's going to have, specifically IBIT, I'll do. A lot of people just ask about Bitcoin. Let's just go right to Bitcoin. It's going to be kind of similar. So I think it's going to have a little bit of trouble contending with just right here. In terms of the 200-day test for this, so it recovered it very, very quickly. So the Japan, I don't even think anything of it. It was a little bit of a heat check, and then it came in. Okay, so not a problem. And then here, it really, the first day is when it started. It's September 5th. Remember, I said this clock has till October 5th or the 12th, and then I'll be concerned. And voila, what do we have it? Literally, just about a week later, did we officially get the close? Bitcoin's a 24-hour market, but I'm looking at, how my data provider provides it, and then I'll equate it in my head essentially. So VWAP there was 59.2, or I'm sorry, the 200-day moving average was 58.5, and we close that day at 59. Yeah, so the count starts again. It's interesting to note, depending on the ETF, some of these when I was very concerned about BITO, I think it was, and then maybe it was IBIT. Bitcoin itself is passing the test. It's done this basing between the 67K level, or to be exact, that 74K high print back in March. And I mean, I'll forgive this wick, but 50K due to the Japan crash. Was that day? Yeah. So it's been in this range. That's quite a range for Bitcoin, 50 to 75 with the 200-day moving average still going up. And it's at 58.7. That should serve as your, your near-term and pretty significant support, I would say. The next thing, I think it's going to have a little bit of a tough time where we are currently. You need a little bit of vol expansion. The next ultimate target, I would say, maybe over the next 1 to 2 weeks. Looks like there is some bullish momentum in the name. I would say this can get to a top of near term. I mean, I have 66K on another kind of a crazy prediction, but more so probably closer to 64K, which would be a nice gain on top of the recent 4% gain. All right, let's go to FXI. So again, just a note, Bitcoin really, depending on how the underlying security trades, is how it's been, defendable or not. The underlying, though, itself, Bitcoin looks good. It's been defended just fine. I'd like to see it get more exuberance. Last thing on this. So again, it hasn't really spent much time above the 50 RSI. That to me is the tug of war is going equal between bulls and bears. And if it's right at 50, no one's really winning. It's just really strong. Kind of like that scene in Squid Game, right? But the last time it was really winning and doing well is when really the slope of the 200-day was sharp and it was rising all the way from 56 to that 68 level. So last time it really spent some considerable time above the 200-day or above a 50 RSI was mid to end of July, was when the good times were here. That was a different environment in the world. We were watching the Olympics, and it was just a different place. So overall, though, constructive Bitcoin chart. All right, just want to pin that up, and that it's still, base, and the highs were back here in March. Okay, FXI, we are looking at the chart. FXI, a nice move of 1.4% or 1.27% today. Let's look at the chart. So this is interesting. The 200 moving average, this doesn't look so much like an oopsie. Really, the trend here for China, I got to tell you, is strength since April 25th, in that it's not getting its what handed to it anymore. I'm not saying it's an area for growth, massively. Look at the lower highs here for May, and then July, and then a clip under the 200 moving average here in August. So near-term forecast, this looks to be, again, they're rotating into some assets that have been beat up. This looks like it will continue to rise to about that, right, a hair under 27 even. So I'll put it over here where my cursor is. I think it'll eclipse these August highs, and I think we'll get just inside. I don't think we're going to get that July high. I think we'll get right there to about 27. So about another, 2.5% of gains for China, I believe, in the next 2 weeks. And then the XOP, we were highlighting this. I wrote about it in Chart Advisor about 2 weeks ago. Let's take a look at the chart. The overall story was, not super well. Let's see, because this had its death clock counted as well, right? So right here, August 1st, my counter went to September 1st to about September the 8th. Last I checked, that was 2 weeks ago. And this looks like crapola with a 52-week low coming on 9/11. So near term, though, so you got to be careful. So they're rotating into some of the beat up names. This is significantly beat up and has been a loser by any metric you look at it as of August 1st. This should have a nice mean reversion bump, which is what you've seen basically to this 132 level from that ugly low of 124. And we said you're probably going to have a mean reversion bump. I said at least to about 133. And ultimately, if it wants, and you get the exuberance and the animal spirits of the market, this could get to try to get towards this 141, 142. 142 is the 200 moving average, and it's going lower. Don't love that. It looks kind of heavy to me. So I think maybe, again, these are going to be in levels. 133, it's basically at. I think this will have a nice 2 weeks. So depending on what kind of trader you are, you can sell puts, you can buy calls, but your ultimate resistance is at 140, 142 here. That it's not going to get much better than that, which is 10 points away, or a little bit less than 10%. All right, so those were the big moves today on Fed Eve, essentially. They bought the airlines, Bitcoin, China, and oil and gas. What did they sell? It came at the expense of healthcare. Healthcare had I don't want to say a nasty day, but it was down 1% when the S&P SPY was making new all-time highs. This looks, though, and I will write this down because I am not in this trend. I think this is your opportunity right here. It is on its 21-day exponential moving average. It's, to be exact, it's 154.84. So you're buying it, a buck higher. Not a huge deal. You are technically getting on sale here. I'm writing look at and buy XLV tomorrow, 9/18. All right. And the near-term target is 159. I think the group will be, it's a great spot to be in. The only thing that's a little bit of a problem, I guess, is the all-time high is 159.64. I'm not so sure it's going to get it on this run, but again, I want to be in this trend. Then I'll be really happy with the portfolio if I end up getting in as well as this, along with Homebuilders. And I already have my NVIDIA, semiconductor, and Bitcoin. I'm exactly where I want to be, especially for this run of the market, even if we're seasonally flat or if we have small upsides to what I believe is going to happen. So this one looks good. I would probably chomp right here if you want to buy this one. Tomorrow, of course, it isn't financial advice or whatever. But this looks great with a buy at 155, which is a 21-day exponential moving average. Also the 50-day moving average. Well, the 50 days 152, but it's right in that range. And the target looks like 159. So, not huge amount of upside, but again, it's more about being in the trend going into the end of the year. And then Japan got hit today, 1.2%. Let's take a look at what is going on here. Again, very important. The clock, of course, the whole world was looking at Japan. This August 5th crash, I gave it a month. It recovered August 13th. That's what you want to see. This is, I don't want to talk about my Eagles and the mess that happened yesterday, but they remind me of, we talked about this last week, and I'm probably going to go to a weird circle here, but Jalen, best quarterback essentially over the past 2 years, outside of Mahomes, because he's got so many rings. But in the last 12 weeks or so, he's thrown picks, he's fumbled, it's been a mess. It's all about time frame. Japan, you want to see him get back on his winning ways, right? Maybe basketball is a better example. You don't want to see Luka Doncic, for example, or my boy Embiid have 2 weeks of games under 8 points. That's bad. You want to see him have a bad week and then right back to his winning ways, right back to his season average and pushing it, right? That's what you have here with Japan. This is a trend you want to be involved in, right? Near term, this looks similar to the healthcare, actually, in that you are getting an entry right here. The 21-day exponential moving average is 69.85. So you're getting a little bit on sale. I don't think this is going to go to the sky immediately, but my near-term target is 73. That momentum would take it above a 200-day, above its 52-week high. You see the slope of the 200-day moving average. It's pretty interesting. I don't like buying on a major Fed day. So again, be very careful. I'm not saying the buy's only open tomorrow. God knows what's going to happen tomorrow, especially at 2 o'clock when the interest rates cut is announced, and then the presser at 2:30 till however long he answers questions, and then how we trade after that. But be certain with your levels. That's why I'm giving you the 21-day exponential moving average, regardless of what Powell says. This is what these securities were valued at for the past month, since mid-August. Okay, since you were having ice cream on the beach or wherever you are. So it's not a meaningless level. And I do like healthcare and Japan here. Just do understand they're not going to go to the moon and you buy 0 DTE calls on these tomorrow. But these are trends I would like to be a part of. Even Japan with all their mess, with the yen trade and everything else, this looks solid. So 73 near term, that's $3. That's a nice percenter gain. And be careful in terms of liquidity on EWJ options. But if I were to get long, just an example on this. So again, that's a trend I want to be in. I'm not even going to get too intricate or complicated in the construction of this. I might just do, I might do like a 70. I have to look at the open interest, of course, and the implied volatility and exactly where I'm getting in. But I probably buy maybe the 70 calls. Of course, I need open interest, like I said. And then I might sell the, maybe sell the October 73 or 75 calls against it. I have to, again, look at the credit debit breakdown and see what I would get in terms of what I would need to subsidize the cost, right? Like a third of the premium, etc. So that is a good trade, though. I would put on Japan looks good. Again, be careful with Powell tomorrow. Markets are going to go usually zigzag and then zig back. So just tomorrow's going to be an interesting one. Also below average volume today that pushes to new all-time highs. Typically what happens with all-time highs is low volume. So people just hold on to their shares and get a little bit scared of chasing, but they'll join soon enough. All right, so those are the 2 big losers today. If you have a ticker or anything, single stock, we can take a look, or ETF, I'll entertain it. Okay, top 5 gainers the past 5 days, no repeats. Pretty amazing. What have they been piling into? Gold miner juniors. We talked about this. I wrote about it. This thing is a trend you want to be a part of. That's what we're trying to do here, right? In terms of Japan, healthcare, potential shorts, all that, right? So there's always a bull and bear market somewhere, like my boy Jim Cramer says. So this right here, beautiful rising 200-day moving average, overbought behavior for chunks here in April, a little bit here in May. This one really got its legs underneath it starting March 6th. You could say, it's that 2 quarters out, 6 months away from anticipating Fed cuts. Sometimes it's that simple. I remember when I joined, a buddy asked me years ago, and something I heard as well, and I repeated, when's the best time to buy the market? And I just straight up said 6 months before the Fed cuts rates. It's that simple. Of course, only God knows, but sometimes it's that simple. And you can look at historical percentage as well in terms of your win rate and the percentage per duration trade that you would have advanced. So it's a winning trade. All right, so here, this just looks a little heavy. We said you want to buy this around 46 with a top of around 49.5. It got all the way to 49.41 yesterday. I still see it being in accumulation mode, though you're going to have some oscillations, of course, in terms of tomorrow. But again, a ceiling here of around 49.5. You want to get entries closer to around that 46 level, but a stellar group. All right, one of my favorite area is just because it's such a piece of crap. I used to short this seemingly perpetually, and I love the 200-day countdown clock. This thing's a piece of crap. I think if you're looking and you're watching this with me, daily 52-week low is 1 week removed. You got to be careful because folks are rotating into losers. That being said, look at the gain it's had from 37 to 41. A nice day today, up 2.2%. I do think they'll continue to rotate into, worse performing stuff like this with a ceiling here of right around 43. I do think it tries to make a gasp towards the 200-day moving average that is still sliding lower, and that'll be your cue to short if it's that simple. I don't think it's going to be. I think it'll probably contend with these July highs right around that 43. You're probably going to not get it quite at 43.80. You'll probably get it somewhere where these meet potentially at around 43.5, and that'll be your target to sell it around down to $40, potentially as low as 38. But be careful first. Accumulation more for this over the next, I would say, 1 to 2 weeks. All right. And again, the test was right here. Look at this. An oopsie. Okay. Is this a new character change? Is this a superstar now? Nope. The clock starts right here. And it's been well under. It was been here since June 14th. So it's, 3 months just continuing to be a loser. The individual names in this component, the individual components of the ETF are not doing well either. They're not the names that we're talking about making new 52-week or all-time highs. So a good area to be short. Speaking of which, Mexico used to be a great area to be short, but this is the third best place in the market for the past week. So the best place is the gold miner juniors up 10. TAN was up 8 and Mexico up 8. Let's take a look. Again, the test for me started back here, June 3rd. I gave it to about July 3rd. And this thing is just all the way out and very similar to TAN. Had its 52-week low just 1 week removed. So now what? A monster gain, as we said, up 8% in 5 days. If you go trough to peak here, it's $51 all the way at 55. That's massive. $4, almost 10% for a nation ETF. I think this will continue to be in accumulation mode, but with a roof above it of about right around 56.5. I don't think it gets anywhere near this 200-day moving average, which lets me know it's a weaker security. It might have more to go, but I think it's going to hit its head right around this 56.5. So another $1.50 or maybe 3%. All right. Silver, they love the metals this week and the hard metal commodities. Just reading articles, you need silver for AI. You need a lot of, correlated. It's not specifically this move. Obviously, this moves with gold and with yields, according to the relationship. So this accumulation mode, but it's going to hit its head right around this 28-quarter level. As you can see, it's already top upper Bollinger Band. Even if you get this volatility expansion, probably right around 28-quarter, not too much more. So it didn't have a great day today. This is going to move tomorrow as well. And then lastly, or two more, Homebuilders, a new all-time high today. We're talking about a similar group, ITB. Home construction. Now what? If you're in, congrats. An absolutely stellar group to be in, like just all year. Congrats if you got in on this last October. Just a magnificent move. Again, accumulation mode where you want to buy this ideally, but it's with the benefits of hindsight is 115. That's a great valuation in terms of many different lookbacks. The 21-day exponential moving average, 50-day is just if you're in there, to me, you're almost getting in at near-term parity, as it were. And the target though is 121.5, right around there. So this is a little bit too rich for my blood, but this looks great. Almost looks like a cup and handle. This could go further. Again, we're talking about ITB and how you can get that vol expansion to take you to higher levels. Potentially 122, but this is rich here. It's had a massive run in just 5 days. So again, trees don't go to the sky. Homebuilders, the 5th best area to be in the market this week. And I usually do top 5 losers of the past 5 days. I can only get one. There's one loser, and it's a contra relationship with the market. It's VXX. So totally risk on. We said that accumulation or distribution phase for SPY was going to end around September the 10th and begin there. And that's exactly what happened. So VXX, this is going to go to distribution mode to about 40. Tomorrow is going to be a huge relief. Just because we're going to find out what the Fed does. Is it 25? Is it 50? Is the Powell have a hoagie for lunch? Whatever. the volatility is going to come out of the market, so you're going to see that decline. So be prepared for unless the market has a soft crash tomorrow, you're going to see the volatility softer, I would think, tomorrow by market close at 4 p.m. Eastern time. I would expect VXX to go over the next 1 to 2 weeks to trend towards 40, which is its 52-week low, adjusted after split, which totally makes sense as SPY hit new all-time highs today. So this is a signal for me. The up 2% today, again, was because the concern about tomorrow. People don't know how the market's going to react, as well as, people straight up just buying puts and hedging the portfolio when the market's at all-time highs. So don't overthink it. But yeah, I expect this to be distributed down to 40 over the next 2 weeks. All right, so top 3 absolute trades of the past 5 days. If you're in the gold miners, solar, and Mexico, congratulations. Tomorrow, we will, of course, have a show to recap the mess. I'm sure that happens, and then the Friday we'll recap the week. I don't see any tickers. You're going to let me go. Peace out.